Good afternoon, everybody. I think we are live here. Today is the 17th of September, 2010, and the market has closed. So let me just get confirmation from StockTwits that we're live, and I believe we are, but I'm going to assume we're live. How's that sound? You guys hearing me? Okay. Let's see. Someone's typing to me, but I don't know if we're live, so it looks like I'm just going to assume we are. Let's go ahead and take a look at the S&P 500. The market was basically flat this week. Well, it wasn't flat, I shouldn't say that. It gapped higher on Monday, but we've basically been flat for the last 5 days as the market has been consolidating underneath this 113 level, and 113.25 basically. The question is this distribution here before the market drops back down, or is the market holding on up in here? And really right now we don't know. We're at a pretty important juncture. We've seen that the market has been riding a series of higher highs and higher lows above the rising 5-day moving average. Today we had lost this trend line earlier today, and that doesn't mean that the market's going to reverse. It means that basically the slope is or the angle of ascent isn't as strong anymore, and we're more neutral in here. We've traded in a very tight range. The level that we've been kind of focused on all week is this 112 area. That we're really going to have to break below 112 before the market really should look lower, and we'd see if this 5-day moving average, which is starting to act as resistance, but we haven't broken a series of lower highs and lower lows yet, so it's not really a reason to be concerned. It is, like I said, I think earlier in the week, looking like more of a kind of a yellow light. If you look at this as a nice stage 2 uptrend, this is possibly stage 3 distribution. We'll know if it breaks down and holds below that 112, then we'll look for a profit taking rally that maybe this market brings it down towards the 50-day moving average. It's tough to say exactly. A lot of stocks are holding up really well. Today we did have 1,700 advancers, 1,235 decliners, and it was a real neutral day in here. But there were obviously, like all days, there were opportunities in there. And if we look at what I was focusing on, I was telling subscribers that on a day like today, when we had the S&P, the spiders go ex-dividend, and we had seen that there was a gap higher on days when there's a gap in the market. On days when we have a gap in the market, I find it just better or a lot of pre-market activity. What I like to do is look at the ES instead of the SPY, and I accidentally had it on tick. But you can see here that from 9:30 basically, even though the market, the market was up a couple handles, we had the market stuck below that volume weighted average price, and that volume weighted average price was declining right from the start. It came down towards that pivot, hit the volume weighted average price 2 more times, and really, like I tweeted it, that volume weighted average price acted like an electric fence today. So that was a good guideline for trading in the market today. That it was again a quiet day. There were some great opportunities, and we were talking. I've got a chat room now on the Alpha Trends, and this morning this stock's been on our list this week, but this morning on the CHTP we had bought it right here. I sold most of mine up in there and bought some back at 43 cents. Sold some of that up in here, and then right before it took off, right here, I put out on the chat room that I was selling my position because it just didn't seem like it was going to do anything. And then, of course, CHTP really took off. But it was a great day of trading in this stock in particular. But I didn't trade it perfectly, far from it, in fact, but it was still a real nice trade in there. And I know a lot of people made some good money in that one. But back to the S&P 500, we're still at this really important juncture on the weekly time frame with this inverted head and shoulders pattern and the neckline there, and all these moving averages kind of clustered together. We can see that we've been holding every day this week. We've held above the 50 and the 200-day moving average. Now, what I didn't hear anyone mention this week, which was kind of interesting. Let's just move this back a little bit. Is So on here we've got that that 50-day moving average, which is the red one. The blue is the 100. The green is the 150, and the black is the 200. So what I was going to say is, a lot of people were saying, hey, it's the 150 or the 200 day that's acting as resistance, but now those are holding as support. So it kind of adds further to the importance of this 112 area, 110. 111, 90ish basically. I think that's really going to be the key level next week. If we break below that 112 level, then we would start to look for the next levels of potential support, which would be these prior resistance levels such as 111.60, and then probably down towards 110.75. We might even start to think about, if we start to see a deeper pullback, that we throw some Fibonacci on here and say maybe we're going to head down towards a 38.2% of this rally. A retracement would get us down to about 110. But those are just some levels to keep an eye on. We're building energy here clearly for something. Is it going to be a breakout, or is it going to be a breakdown? Now, it's interesting when you look at the Russell 2000. Now, this is obviously, it's 2,000 stocks. We broke the downtrend line in here, and we actually have a market that looks fairly neutral to slightly bullish. It's 2,000, basically mid-cap type stocks. But when you look at the mid-cap index, which is 400 stocks, it really looks almost identical to the SPY. So it's kind of interesting that the top 400 mid-cap stocks are really kind of outperforming the other 1,600, I suppose, is an interesting way to look at it. And anyways, let's take a look at the Nasdaq. The Nasdaq, did break above what had been an important level here at the basically these highs from June, which was $47.70 basically. We broke above that and held above it. This market's pretty extended. That's the most bearish thing you could say about it is, hey, we're overextended and due for a pullback. But that these markets can continue to go a lot longer and a lot further than a lot of people expect them to. But when they get this extended, again, you ask yourself the two questions: where has it come from? In other words, how much energy is it expended? It's just rallied from 43.5 up to 48, and so about 12% or so. And where does it have the potential to go before it's likely to encounter resistance? Well, this was the area where we would have expected. Now, the next important level is really going to be, or the next bigger level of focus, I think, is probably about $48.90 or so, $48.80. That was, pretty much support earlier in April that turned into resistance just after the flash crash in May. So we're still kind of rebuilding, and I think that what would be an ideal scenario would be for a pullback, maybe a pause that refreshes in here before the market continues to rally. But obviously you want to stay focused on the strongest stocks and manage risk. That's always the name of the game. Somebody asked me yesterday, how will we know if this is confirmed, if we have a confirmed breakout of the inverted head and shoulders pattern in that neckline? And I said, I point out these patterns just because they're something to keep an eye on, but they're not something to really trade off of. In other words, you don't buy at 113.25 and expect that it's going to go the height of this pattern, which is basically 12 points. So you would expect that to run up to 125 would be the implication of an inverted head and shoulders pattern. Now, what I was saying though is that you don't want to just buy there and say, well, it's moving, because maybe we get one of those moves where it breaks out, runs to 113.50, and then caves in. That could happen too. So the name of the game is always risk management, but to be aware of these bigger picture events and setups, basically, so, like the inverted head and shoulders pattern. So they're not useless, but they're it's something to frame our analysis around and give us an indication of what other people are thinking, and in trying to establish our risk reward. So the focus really in the Russell 2000 next week as well, I think, will be the 64.5 level. That was what I was saying earlier in the week is really going to be the key level this week, and it was. The market held up above that level, traded in a real tight range. So we're getting these little pops higher, and followed by so the trend has been the last couple of weeks is we gap up. Actually, this was a Friday. I was going to say we gap up on a Monday, but this was a Friday before the holiday. But we have these 5-day cycles, it looks like, where we run all at once, then we go sideways, then we run, and then go sideways. So the point is, though, these build nice little solid levels underneath us that this 64.5, as long as we 64.40, as long as we hold above that, it should be good support. Now, if we broke below it and dipped slightly down and came back in, that would be a positive event. If we dipped down and then rallied back up and were to sell off from there, then we would be looking at levels such as 63. So next week, like every week, will be an interesting one. The semiconductors, I was saying early in the week that they looked magnetized to that 50-day moving average. They touched exactly on that today, went a little bit through it, but basically closed on the 50-day moving average. And this is also a level of, or close to here. We have this prior support from where we had this larger breakdown occur from. So now we had this pullback with the higher low, and we're getting up into this area where we would expect there, $26.70 up to about $27 a share at this prior support. We would expect to encounter some resistance in there. So realistically, the semiconductors had a big shakeout on below this 25.5 level. It sucked the short sellers in. They're squeezing them higher now. Now, is this going to be the resistance, or is this just going to be a pause within this recovery that these semiconductors seem to be going under? And the key in here is the same thing. Are these levels of resistance, these prior levels of resistance, holding a support, and resistance broken becoming support? So 26.40 is going to be important. Maybe 26.45 will be important early next week. We can look at a trend line that maybe looks like that, and where the 5-day moving average is. What's the direction of that 5-day moving average? The financials are a little bit further along in this. What appears to be maybe a little bit of distribution occurring here on this 30-minute chart. You can see we have these lower highs. It's just kind of drifting lower, though. There's not any real vigor to the selling. So the 1460 level did hold. If you remember from Wednesday, we were talking about 1460, 1440, and then 1420. We are below this 5-day moving average, though, and I think we're going to need to see the financials get back above 1475 before we could think that maybe they're going to have the ability to lead the market. But when you look at that daily time frame, we had this burst higher, a pullback right at the 50-day moving average, another burst higher, and now this just a real nice pullback here. It doesn't look like anything to really be concerned about yet. It doesn't look like, again, here on a 10-minute time frame, we don't want to be long because it's making lower highs and lower lows, but I don't think you want to be aggressively short either because the daily time frame's holding up pretty good. So I think that we want to look for either a bigger breakdown, maybe towards that 50-day moving average, though, and that's now at 1440 as well, which adds significance to that level. So we either want to look for a continued breakdown, or we want to see that it's going to be able to build the energy in here and make a push for these highs at this $15.10 level. We are stuck underneath that 200-day moving average in here. That's pretty clear that the market is stuck below that. 1 or 2 days, closing above or below isn't really significant for any market really, but it's just something to be aware of because it is a visual reference point that a lot of people look at. The IYR continues to be really one of the strongest groups. It's getting up towards the year highs here and really holding up well with a rising 10, 20, and 50-day moving average. You look at the weekly time frame, and it looks like it's still building for maybe another push. Maybe into the end of the year towards $60 a share. It's the second shoe never dropped. You look at the 30-minute time frame. It's we've got these higher lows above a rising 5-day moving average. So the commercial real estate continues to be an area of strength. The retailers, you can see on the daily time frame, we got above this little resistance here about a week and a half ago. That did hold as support. We've got all these moving averages rising, but when you look at the daily time frame. We're right there at that 150 and 250-day moving average as well. So I think that another pullback in here would be nice to see, and if it can hold near that 10-day moving average and the prior resistance at about 93, then maybe retailers continue to move higher here a little bit. But let's see. The other big thing this week was gold, I guess. Gold continues to move higher in here. The biggest day really was on Tuesday. It's up at all-time closing highs. Hear people talking bearishly about it. I don't think that makes sense because we're still holding trend lines, we're still holding moving averages, and we're closing at the highest levels that it's ever closed at. I don't see what the bearishness of that is. But as with any trend, if you're long, the name of the game is to protect your gains. So I guess that's all I have to talk about. Let's take a look at some of the stocks that you guys have put in here on StockTwits. And thanks for the retweets and all that, everybody. Let's see. So Mike Will is asking me to take a look at CZZ, and CZZ. He's saying, let's see, where did I just lost that. How was that possible? Breaking output seems tired. What are your thoughts? Well, let's take a look in here. Average daily volume is about 1 million shares a day, and it's holding up really nicely. I don't see that it looks tired so much. On the weekly time frame, it's up against this level where we had the bigger breakdown in 2008. It's basically recovered all that, but it's still within this beautiful weekly uptrend. And on the daily time frame, we've got this nice little consolidation, and it seems to be breaking higher from there. So it looks like it staged a nice breakout today, and I would say that you protect your gains with a stop maybe down near about 11 and a quarter or so. But CZZ looks like a nice bullish uptrend on that daily time frame. So thanks, Lee, Derek, Phil, Doug, Chart Diva. And no questions. Oh, okay, here we go. How about DGIT? DGIT for Fibline, and thanks for the mention earlier as well. DGIT, I've had other people ask me about this one, and it's experienced a nice bounce in here recently. I don't know what the story is in here, but something bad happened, and it wasn't retail selling that got it out. I mean, a big institution said, enough here, I want out of this thing. So when you have these stocks that gap down like this, they generally do not come back all the way. I've found. In fact, I don't trust these stocks at all when they've had these big gaps. A lot of times, you get a piece of bad news and it dribbles out, and then you get another gap lower, and then another gap lower. So I would not be trusting of this one at all. If you're long the stock, I mean, it got the place to have bought it, in my opinion, would have been over in here once we were starting to see higher highs and higher lows above a rising 5-day moving average, and we have that pattern of these higher highs and higher lows. So if you're long, I would suggest that you probably protect yourself with a stop near 18. There's no way I would go near this thing long. I don't even when they gap down like that, I don't consider them for until they've healed for quite a while, actually. Value Chaser is asking me about RIM, and Research in Motion, as everyone knows, had earnings last night. The stock gapped up. It's below a declining 50-day moving average, and it's not unusual for gaps and bigger moves under a declining 50-day moving average to fail. So it gapped up. It sold off on very heavy volume. I think that if they haven't scared you out on the way down in RIM, they're going to wear you out. That it's still in this downtrend on the daily time frame, and the weekly time frame still looks terrible as well. So I think RIM's still in trouble, and it couldn't hold on to those gains today. In fact, it gapped up, and then it broke below the volume weighted average price here and sold off very aggressively. We saw that it briefly got above that volume weighted average price, and then the VWAP acted as resistance, and the sellers really took control in here today. So the average price that the stock traded at today was $47.30, and we closed down at $46.70. So the average long participant from today on this massive volume move is down about 60 cents. The average person in this stock over the last, since the beginning of the year is down pretty good, and we're in a downtrend below all the declining moving averages. I think that you look at it, and it's okay to day trade, I suppose, but it's the stock's in trouble. I think so. I wouldn't. It's more of a day trading stock in here, I guess. Would really be the answer. How about a look at Visa for you? For who is that? You Karlowitz. Visa, Visa is, you look at Mastercard, okay, and Visa. These stocks are big stocks, and institutions love to get involved in these things, especially after they look like they're on the verge of a breakdown. Mastercard looked like it was going to. Let's just take a look at Mastercard just for a minute so I can make my point. Mastercard looked like it was about to fall off a cliff here this week, and then what did we have happen? We had this thing rally, and I was talking actually on Monday that we were looking at this thing on Alpha Trends as a short candidate if it broke down. I said don't short it unless it breaks down, and because it could be potentially a big short squeeze play, and that's what we have in here. And now Mastercard's back to the middle of a top end of a trading range. Back to Visa though. Visa broke down. I think if Visa gets back above probably $70 a share, you're going to see another squeeze rally in shares of Visa. So I don't know if you're looking, especially weekly candle at support. So Karlowitz is saying, we've got some support here on the weekly chart. It's still in a downtrend, so I don't trust it. I think that any rally that comes from here is likely to be a short squeeze rally, not really something that's going to sustain unless maybe you're looking at a year out or 2 years out or something like that. So just off the lows from 2009, this 50% area had generally been some support, and now in that daily time frame, again, I think that probably above this week's highs, right around the 69.5, getting back above that you would probably see a short squeeze rally. And here, this little resistance had been acting as support yesterday, so getting back up through there, maybe you go in and get a couple points in it, but it's still a stock below a declining 50-day moving average, and it's probably in need of a time recovery, I think. How about Coco? And here's another, just broken stock that if they don't scare you out, generally they're going to wear you out. It's a broken stock. It's getting a bounce in here, but I maybe you get it up towards that 50-day moving average, but I wouldn't expect very much from this. If you're long, then I would say protect yourself with a stop underneath one of these higher lows. But I like to I look at these stocks with an obvious bias, and it's generally if I see a stock below a declining 50-day moving average, I'm looking at it as rallies in that stock are generally going to be guilty till proven innocent. They are not going to follow through most of the time. Doesn't mean they can't, but most of the time, and I want to go where the odds are. If the 50-day moving average is advancing, then I look at the stock as innocent till proven guilty, and something that's probably going to be able to show some upward momentum. A stock like Rax that's been pulling back to this prior breakout. This resistance. Is this going to become support? Well, you look at a 10-minute time frame on Rax, and what do we see? We still see this pattern of lower highs and lower lows, and we have a declining 5-day moving average. So if Rax can start to turn sideways to higher, then it will get to be able to maybe make a sustained recovery. Someone asked me on Wednesday about Humana. We traded this one something like that, and now it's been pulling back, and I was saying it still has this pattern, and here a couple days later that short-term pattern is still existent, which is lower highs and lower lows. So there's it's in a stage 4 decline on the 10-minute time frame. We have an uptrend on the daily time frame, so we have mixed messages. And now we're in what I was mentioning in here is what we didn't want to see is that the volume is increasing on the way down in Humana, which really puts suspicion on this breakout here. Doesn't mean it can't recover, but there's no point in buying while the stock is still making lower highs and lower lows on the short-term time frame. We want to have those trends aligned. So Derek wants me to take a look at some levels in Navistar. Let's take a look at Navistar. Navistar below the declining 10, 20, and 50-day moving averages. Back that up a little bit and get some bigger picture perspective. Navistar looks like it's on the bigger term time frame, the daily time frame, I would say it looks like probably a good short candidate. The weekly time frame says, though, it's at this prior resistance, which seems to kind of be holding as support. So I don't know, Navistar, Derek, I'd say I would have a short bias because the daily chart looks bad, but the weekly time frame says, same type of thing. Where has it come from? It's come from 60 down to 40. It's just dropped 35% here over the last couple months. And where does it have the potential to go before it's likely to encounter some support? Well, right here, this prior resistance, prior resistance tends to act as support. So I would just say, Derek, that it just looks kind of, I guess, overall more neutral than anything. And I'll take a look at two more here, which would be first from Train Chaser. And are you looking at TWI and FSYS? I'm just going to take a look at one of them, and I know FSYS is a thinly traded stock, only 207,000 shares, so I'm going to take the TWI and take a look at that one. Titan, though, good looking daily chart, looks like it's trying to make a move above some resistance of the last couple months in here. The weekly time frame, I really like the way this weekly chart looks, that you've got this stock that just had the shit kicked out of it here, and then it's been really just trading sideways. We had this resistance in 2009 that's acted as support. The only concern is that it doesn't seem to ever have any get up and go moves. Maybe it's going to be different here, but this resistance nicely acting as support for the last 6 months. We've got the rising 10, 20, 30, 40 week moving averages. So that green one is the 40 week or 200 day, which we can see right here turns to black on this time frame. But yeah, I like the way this one looks, and in particular, this looks like we've got the 50 and the 100 day moving average right down here at $11 a share. So that seems like also maybe an important higher low in here. So we had kind of, looks like a little bit of a shakeout, and then the stock rallied. So I think if you can get a little pullback in here on Monday and then buy some strength. So let's say it pulls back. Let's say Monday's pivot level is at about $11.95. I'm just going to guess, or this prior resistance. I would look for it to. So in other words, here's where we are. If we were looking at like a 1 minute chart, and we'll take 3 of these and make it. We'll make this today. Okay. So Monday, I think maybe it gaps up, then kind of pulls back down or something like that. And then what we want to see is that it does something like this, gets back above what would be the volume weighted average price, and you would want to buy it on here. So look for a pullback to either this prior resistance at 11.95-ish, and then look to buy, don't buy the pullback because maybe it just keeps pulling back the way Humana keeps pulling back. And the people who've been buying a pullback in Humana are saying, wait a minute, what's going on with this thing? I'm buying the pullback, but you don't want to buy pullbacks. You want to buy after a pullback, and then the stock kind of finds a little bit of support. So maybe it pulls back a little bit in here and then gets some momentum back up. So maybe it pulls back to $11.95, then you buy it as it rallies back up above $12.10 or something like that would be a way to consider it, I think. Last one we're going to look at is for SmedPond, which is MPEL, and the question is, does it look like it's heading back towards above 5? 5 is only 11 pennies away, but here's this 510 looks like an area where it may encounter a little bit of resistance. This is one that the weekly chart, it just never really seems to get going. It's a Macau-based casino play. I know that, and it just I was in this one yesterday and got bored out of it actually, which is so stupid. But it's got a nice pattern of higher highs and higher lows, so I think that it's probably headed north of $5 a share. Where is it likely to maybe encounter a little resistance up near about 510, 515, and then consolidate a few days before deciding whether it can continue to move higher would be the way I would look at it early next week, though. So that'll do it, everybody. Thanks for tuning in. Hope everybody had a great week of trading, and I will talk to you again next Wednesday. Have a good weekend.